You guys for joining us. I gotta set my phone on the charger real quick. Let's make sure everything is going well. Just want to make sure we're up and running without no hiccups. Again, I didn't charge. I have my camera here. I'll probably have it plugged in tomorrow. I probably just have to unplug it, plug it back in. Guys, thank you so much for joining us tonight. I'm Justin. This is the Ivy League live stream. We have a wonderful stream in store for you guys tonight. We're good. We are good to go. So I hope you guys had a great day. What a day in the markets. What a day in the markets. All right. What is my goal? My goal is to help educate, teach, have a platform here that traders of all kinds can come to and have a place to come up with ideas, go over trades, struggling, anything that they have a place to go to. And, where we can all get better every day. Every day above ground is a good day, guys. Again, I hope you guys had a wonderful day. No, I caught a little AI today. Collins, how are you tonight, my guy? I appreciate you tuning in. I got a huge lesson I'm going to go over, guys. I got a huge lesson. All right, let's kick it off. Okay. If you're new here, again, I'm Justin. This is the Ivy League live stream. We've created this to be able to, again, have a place to go to if you're struggling, whether you're not struggling, you just want some ideas, a place to hang out, news, all that fun stuff. As a group, we can all become better traders. All right, that is our goal here. So, the market. What happened today? Let me get a sip of water. I do not want to do that in the mic. So, let's back it up real quick. Again, I had to reload. I did not have to reload, but I had a system thing I had to do it for my computer, and that's why we were a little late tonight. So again, we apologize for that. It's a little hectic right now with everything going on, but we got a really good stream in store tonight. What's this stream going to cover? We're going to go over the markets really quickly. It was a huge day today, a huge momentum day. Okay. And I always look for these momentum type of days on this day. On this day, I mean. I said day, but whatever. It's live. What are you going to do? You don't put yourself in uncomfortable situations. How are you going to progress and become better? So it's a little hard. Again, we do have a camera. We usually have it up, but right now I just got to unplug it, redo it, blah, blah, blah. So we had the markets rip to the upside. We had all kinds of data today. All right, so this market recap first is going to go into the lesson I'm going to bring up today, all right? Because when you come in here, tune in live, it's me. I would like to have other people on here and maybe have some screens and stuff going, and we'll figure all that out. I have some ideas. I'm not going to put it all out there right now. So anyway, you're going to see my good, the bad, the ugly, okay? We keep this channel real. We don't do no front running. We don't lie. We don't just use money as just a way to get people brought in. We're here to become better traders, okay? That is it. We're here to manage risk first and then catch up or downside second, guys. It's very important. I've sat on my hands all week. I made a play yesterday. I made a play today. Those are all irrelevant, okay? I looked at the title of this and I said, it's a little misleading. But it's not, okay? Because there's a huge lesson into this 50% SPY trade and this 200% AI trade. All right, a huge lesson. And I think you guys, what I'm going to cover is I think what you guys should do. All right, it's going to involve psychology. It's going to involve the work and time that's needed to be put in this. So, if you're new and you're joining us tonight, if there's anything that you hear me say that if you don't understand, just post it in the chat. I can explain it better. It may be a little difficult for me because I've been doing this for a long time. I've been doing this for a while. I was new at one point as well. I started new. I didn't know anything when I first started. All right, and it's very important to just know this is going to take time, and if you give it time, you're going to get out what you put in. I promise. Okay, I promise. So let's talk about the market real quick. We got a ton of data. How was that data? The data was pretty good. Okay. This is all going to lead into the lesson tonight. And I'm telling you, it's a great lesson. You guys are going to want to hear it. I kind of have it laid out a little bit so we stay on script. I don't have all of it, but there's no reason for it because I'm going to be able to go through it. I'm going to go through these trades with you guys. All right, I'm going to go through what happened to me today that will help you take recognition of yourself when it comes to trading. All right, there's a lot. I'm going to go over it as quick as I possibly can. First off, Christine Lagarde is the head of ECB, the European Central Bank. They raised rates. Okay, she's told the market. When I say she tells you or tells us, it is her relaying to you / the market how you should be positioned. Okay, they have been really good with explaining what they're going to do. So we had a lot of talk today about how does the market going up. If you just looking at other, whether it's YouTube channels, CNBC, Bloomberg, any news outlet, Yahoo, you know them all. Market Watch, all of them. Guys, let's talk about that. Okay, so what do we have? We have the debt ceiling. The debt ceiling is long gone. That's been covered and passed. They've came to an agreement. So let's throw that in the bull bucket. All right, what else do we have? We have Jerome Powell and interest rates. The market knows that Powell just paused or skipped, whatever you want to call it. That could technically go into the bear bucket. All right, let's just say, I think personally, as of today, not tomorrow, whenever you watch this, as of today, I think we are getting that rate hike in July, depending on the CPI numbers. Now, again, I said last night, I think next month's data may come in just a little bit higher, if not break even. I don't think we get a number that's under. If we get a number that's under, then we do. I'm wrong. Okay, I think next CPI number comes in a little bit higher. If not next month, it might be the following. We'll see. So we have that. We have 1 and 1. All right, so we had banks. That was a major reason for the other quarter of this downside in the S&Ps and the overall markets. That's been taken care of, as we know, as of today, tonight, whatever you want to call it. Bull bucket. So now we got 2-1 on the bull bear bucket. Okay. What else do we have? We have Christine Lagarde in they gave interest rates. All the other countries have given interest rates. Technically, that's a bear bucket. We have 2-2. We have 2-2 now. Or no, technically, that is still 3-1 because that Jerome Powell actually will go in the bull bucket because we didn't get the interest rate hike. So we'll put that in the bull bucket. What else is going on? Tight labor market. Is it softening? It is softening. Still very tight. Bull bucket. Where are we at? 4-2. All right, 4-2. Now, I don't have a pen and paper. I'm not writing this down, so if my math is wrong, you see where I'm getting with this? Initial jobless claims, they did come in a little higher today. They're still ultimately very low. Okay? Retail sales month over month, 0.3, previously 0.4. So, again, a slight contraction. Let's go through. There's other stuff we could hit on, but that, for the most part, it is the banks, the debt ceiling, Powell, and the interest rates, and the labor market. Okay. So far, we have a case for the bull side. The thing is, with the bear bucket, what time lapse are you guys thinking? Because everybody is saying they may pull this off or they won't let it happen. This and that. Okay, if you didn't catch last night's live stream, go watch it. So you guys can actually do your own work. Now listen, I don't pay for anything. All right? I do pay for the Squawk Box, but that Squawk Box does not give me what I need as far as data and being able to come up with my own logical reason for when things should happen and for why things should happen and why they shouldn't happen and the timing on that. So just to wrap it all three up, the time in which it happens or doesn't happen and what I think should happen and not happen and just in general. Okay, what am I seeing? I'm seeing a very slow contraction with still a very tight labor market. And as long as this labor market stays tight, that's all it's going to be for now, is a slow contraction. So if we have a slow contraction, you just go through all the numbers. You can use whatever you want. All right, this is what I use. There's all kinds of different ones you can use. It's all the same stuff. Should be, at least. So what else do we have? We have an inverted yield curve. We've had an inverted yield curve for quite some time now. That's not necessarily bullish or bearish because there's still the unknown. Like whatever the case is for the yield curve inversion, well, we know the Fed has hiked. You know, we know half of the reason why it's inverted. Okay, because the Fed is pretty much inverted the short side of it. Okay. So with that said, I think we're gonna come to a point where and I think we're at peak no recession, or we're not going to let it happen. Like we're about in that area because people are starting to admit that they're wrong when they buy puts. Okay, puts are not paying. You have to go through this data, guys, by yourselves and just come up with anything you can come up with. Now, if you don't know how to, you can come on here and we can help you. You can just listen to us. I go through it all the time. Okay, I go through it all the time. Every night during the live stream, I try and cover how I'm looking at the markets and what I'm seeing, what I'm using. So if you don't know, you can always just go to Fred. Okay, that's the St. Louis Fed site. Okay, Federal Reserve Economic Data, St. Louis Fed. Okay, what this is you're able to, if you just type in like GDP. Okay, let's go back so I can help you guys. So I can help guide you guys through this. I'm just going to type in GDP, Fred, F-R-E-D, chart. Okay? And it's going to give you, you want to click on the actual site. Okay? It's going to give you this. All right? It's going to give you this. What is this? This is a chart with the time, the amount of dollars on the left-hand side. Now, what you can do is if you go to edit graph and you go up on the right-hand side, okay, where it says add line, you can, let's just say, we could do unemployment or we could do Fed funds. We could do bank tightening, okay, just things. Hold on, I gotta space it. Or we could do, yeah, tight. Sorry. Add data series. Now you can do 2, 3, 4, 5. So, in part, this is free. This is a free tool that the government gives you that you can use to go about where is data, where is it headed, and in what time frame? What does past performance say about future performance? It is not always indicative. Now, past performance is not indicative of future performance. All right, so you have to keep that in mind. But you can come up with your own reasonings on why something that happened in the past could be relatable. Okay, chances are, if you see something that has happened multiple times, give it hell, even 3 times. Say 3 times in the past, this is what was going on. This is what's going on now. This is how long it took for whatever it is you're trying to look for. Maybe we give give a little and we'll give a lot. Like, you want to just add, like, let's just say a year. you're starting to notice like a year is coming up. So you'll just say, let's just say 10 months to 14, 15 months roughly in that area. It's a slight gauge. So you guys can use stuff like this, and whether you have to go to Google or whatever it is that you're even looking for. I don't even know what would be that you're looking for, whether it could be a recession, like when do we think we're going to get interest rate cuts? You just want to know like domestic, like you can do like transportation, right? You can do like shipping. You can do all kinds of stuff, and you'll see. Okay, well, I'm starting to see that like this country is big in exporting, okay, fuel or whatever, and I'm seeing that they're slowing down. Like they were at a peak, and then it's coming down. So does that mean that they're shipping less because they are anticipating something? Or is it just the material in and of itself? Is there something causing the pullback? Stuff like that, guys. You know what I'm getting at? So this is all free. And what I'm trying to say is you don't have to spend a bunch of money to be able to just come up with factual like reasonings behind on why the market should do something and why it shouldn't. Okay? The first case is the bull bucket or bull bear bucket. Okay? You just throw a quarter in each one, and whichever one fills up, you know, if one's heavier than the other, chances are that's the right side. Okay, and that's the way to look at it. I need a drink real quick. The one other thing that I forgot to put in the bull bucket is CPI's coming down. Maybe it wasn't so transitory after all. Maybe they didn't just give it enough time. Maybe 8 to 10 months wasn't enough time, because that's all they really gave it. They gave it about a year, not even. You know, it was honestly probably like 8 months from what I remember, where it was transitory and then it wasn't. It's like, okay, you want to at least give it a year and a half, like let things open up. We know China's still closed, so how would it ever get better? You know, of course, if China's closed down, and that's our major manufacturer that we rely on for certain goods, whether it's clothing, technology, whatever, you know. If chances are, if they're closed down, there's only going to be an abundance of so many things, you know. But when they do open back up and things will get better, you know. It's just the way things are. So does the Fed over tighten? Maybe. Maybe they do, maybe they don't. But what I do know is I use stuff like this to help me gauge on an idea for the markets, okay? So if I know I'm seeing something and I just see it over and over and over, chances are I have a reason to say this recession that everybody is talking about, it will be here. And again, it may just hit in certain sectors. Okay, there's no way that they can just not let something happen, because what it is, it's the people and the businesses and the corporations that are not the government, that start the cutting, and they dictate what they do. Okay, not the government. All right. I think this recession, again, I'm giving it 2024 roughly. I think we start seeing our job numbers tick up. Like they've already started to tick up just a little bit, but I think we might see it in fall, because what happens is you got to think seasonality. Okay, seasonality, the summer picks up. Like just naturally, things pick up. Now, if you're in the far north and there's a lot of you have to see what's going on in different parts of the world or even the country. What if there was a lot of snow in Minnesota, or it was really cold in Minnesota and they couldn't really get the homes built as fast as they wanted to, you know? And now summertime's here, and all the infrastructure they wanted to do and the homes they were building, maybe they ramp that up to get these houses done and finished because it's summertime, you know, the weather is cooperative. That's just one aspect. Okay, that's not the other aspect of people just like to go out and be out in the sun and go buy drinks and go get food and maybe go to the beach if you're able to, or go to the lake, or go on a hiking trip or something. You know, so there's a seasonality as well that may push this recession talk back. And I wouldn't even say it's necessarily the seasons, but it does play a part in pushing things back. Because you still have a velocity of money that's still going, because we know this because the labor market's still at lows. The market's labor is still tight. There is such a tight labor market still to this day that until that starts to like really, really soften, okay, you got to worry about also the amount of time that it takes for the things to be felt, the higher fuel prices, the higher food prices. That just doesn't kick in overnight. It's when time starts to linger on a lot longer. Tech sector's already done a bunch of layoffs, so a lot of other companies have already done some layoffs. So there's just a time factor to it, to where it's like the stuff just doesn't happen overnight. Okay, so we bring up this Fed chart and stuff like that, and we have brought up every other night that when the Fed has raised interest rates, no matter if it took them 3 years to get there, 5 years to get there, or 10, okay, when the Fed funds rate, I should say, reached its peak, it wasn't for another year until you saw the repercussions from it, because it takes time. It is a lagging data that takes time, all right? It takes time for all this tightening. That's why they call it quantitative easing and quantitative tightening, okay? Because if you're not holding on to the cash, chances are, as that dollar gets passed, it's going to reach a point where that person's going to hold it, and they're going to be the person that doesn't spend on stuff that they don't need, or it just makes its way back to the government and they don't put it back out there. Just like the Fed and their balance sheet. Their balance sheet's been coming down, but the real question is, what happens when they don't reinvest that money? That is liquidity that was in the market that has now left the market. And it's very important, because liquidity is also very important. So I think this recession talk, you guys need to know, if you're tuning in here, tell a friend, bring them on here, sound smart, whatever. You're sitting by the water cooler at work, say, hey, did you know that just about every other rate cycle, it took at least pretty much a year on the button for it to start, before you saw the actual run up in unemployment in a dramatic way. Even when they cut prior to it, it still was literally about a year, 10 months to 14, 15 month lag. All right. So another way you can do this is wherever we are right now. Let's say whatever the date is, it's June 14th or it's June 15th. So go back last year, and what was the Fed funds rate? Let's just say it was 3. Okay, if the Fed funds rate was 3 last year in June, just making up a number again, then that would obviously mean that if you went by a 12-month cycle, that there is still there's still 2% more worth of interest rates to cycle through the system or filter through the system. If you want to go back 18 months, then go back 18 months. Then maybe there's still 4% interest rates that's still to come through this economy. All right, and again, a lot of this stuff also has a big impact on other countries. Okay, there's a big impact on other countries. So today, let's get into the market. So I just wanted to put that out there. Go to Fred, whatever you guys want to come here and come up with ideas, different things to do. We're happy to have you. We're happy to have you. So we got news today. Also, China is going to be easing policy, which is why we kind of seen a little bit of we called this run before the run started. Okay, but you've seen this specifically the past couple days here. This past 2 days is when it really got going. With these China ADRs that are getting a bid because of the fact that China is having what they did was I'm pretty sure they just pretty much lowered their interest rate. I have it written down somewhere. I'll have to just find it to get you the exact information, but that's pretty much. Oh yeah, their benchmark rates. They cut their benchmark. I thought, now just from me, maybe you can look into this, and I haven't looked into it. The last time I thought they were around 7 for some reason. Their benchmark was around 7. I don't know where I'm getting a 7 from, but I'm pretty sure that's about where it was. Not 7%. I don't think it wasn't like 7% interest rates. It's weird, because a lot of these countries do different things. You just have to do the research. The internet is here. There's a lot of information you can find on the internet. You just have to make sure it's the right information. So we had a Fundstrat Tom Lee shares SP Target 2024. So Tom Lee's a guy I really like. I like Tom Lee. And he's the fund manager of Fundstrat, for you guys that don't know. And that's another goal. We get likes and we get shares and we get people going here. I'd like to actually be able to bring you guys some institutional information. That's also, I appreciate it, bro. I appreciate it. Institutional information, like where is positioning? Okay, you have an up tape. How much is there to be bought? If we have a down tape, how much how much money in worth of how much are they going to be selling in a down tape, and at what level? All right, we'll get into all that stuff. You get market outlooks, all kinds of stuff from institutions. I'd like to be able to bring some of that here. I'd also would like to be able to bring people on, more importantly. And what I also want to do is bring people on, just retail traders, and call in, and we're going to talk about whether it's a trade, what's going on in your life, why'd you take a trade ideas. We're gonna build a really cool community here, guys. So the markets were on fire today. We had what I call a continuation type of day. All right. Now I'm on a 5-minute candle right now. So even if I go to a 3, like look at these candles right out the gate. All right. I'm gonna start to get into the lesson. Okay, I'm going to get into the lesson. So I need you guys to understand that there is so much fighting about this recession that caused all this. We got this data, we got Powell, we got all this stuff this week. It was a huge week. And what did the markets do? All right, so I heard the market, it's not like I heard the market's rigged or this and that. So why does the market go up like this? Okay. Let's go to the 15-minute chart, okay? We're going to go to the 15-minute or half hour. So what is this whole rally, okay? Why has it not looked back? All right, why has the rally not looked back? All right, first and foremost, this is the footprint of institutions, okay? This is the footprints of institution digging their teeth long. That word net short. Just as a couple months, like a month or two ago, they've been slowly buying since October. Don't get me wrong, which is what it is they will offset their positions. I love that double buy, guys. I hit this and I hit this. I hit it both, and look at this upside, bro, or not, bro, but like. And again, this is a lesson in and of itself. I have the charts for this, and one day I'll release them, and it'll be a lesson on. Not necessarily front running a run, but just anticipating what are the signs to give you the reasons to take this long here or here in the morning, gap and go. All right. So anyway, that's what we do here. We talk, you guys need a playbook. If you don't know what a playbook is, first off, because it's in my lesson, I want you guys to think of a playbook as like you go to another country and that you have hired a tour guide to take you around to your restaurants, just get you through the town, take you on the places you want to go, because guess what? He is from there. He knows the way of the land, I guess you could say. He knows where things are. He knows how traffic works. Okay, because traffic's different in other countries. There's, different, you're on the opposite side of the road and you're trying to make a right while other people are trying to make a left. But they're on the inner side of you. Like, how does all, so, like London, they have what they call pinch points, where if you have like anything over like a 6.5 foot car or truck, you ain't going to get through it. You're going to just scratch your rims up because they don't want these big trucks and stuff going through these old bridges that they have that are just so old. So they have these pinch points. And so you hire someone to guide you through your experience, okay? And that's what a playbook is for trading. The playbook is to help guide you through your trade and help guide you through your trade. So, and what it does is it helps bring your mind and your instinctiveness to put on a position, where to take profits. You know what to look for. You line things up and say, hey, I got the twin here. Like this right here, or I should say this right here, this long that I took down, and I took it down here. I took it right here. No, it was right here. Guys, I swear to you, it's in my, I will bring my goddamn brokerage account up and show y'all. I do it all the time. Right here. This is where I went long end of day. And as you can see, look at this beautiful pattern. Look at that W double bottom. Bang. Bang. Double bottom on also another double bottom. Here being one. Or, 1 and 1. So, but there's more to it than just that. There's more to it than just a candle pattern. Trust me on that. Look at all the selling pressure, guys. Would you guys get long with all that selling pressure? All right, so that's another one for another day. I'm saving that one, but I'm going to get it out because you guys need to know. All right, so let's get in. Let's move on. So, again, a playbook is to help guide you through your trades. It's to help make things easier for you. It helps you. It helps you identify. It helps you with your entries and your exits. It is your guide. You're going to see it. You're going to see it play out in real life, and you're going to say, "Hey, I know to short this." Whether instinctively, whether you're new or not, in experience, you know what a playbook is if you're experienced, or at least you've heard of it. But they're so important that I don't think a lot of people talk about them and cover them as much as they should, and actually take screenshots of like what's going on that day that you'll be able to recognize the pattern or the setup again in the future, because there's only so many ways for stocks to trade. Okay, it's either up, consolidation, or down. But it's it's all the tools, the volume, MACD, your RSI, the type of day, the type of season, the time. There's all kinds of ways that you can dissect it. Okay, all right. So this rally I want to talk about, and people with the recession. All right, these circles up here were my targets, but it looks like we're already going to get there sooner than we think. And like I said, when I put it up there, it was just a random, I didn't just pick it out of nowhere, but I also didn't measure, the S&P and measure the time, which, it looks like I'm going to be I'm going to be about 6 weeks off, 4 weeks off. So this rally that we've had, guys, is literally an institutional footprint that's telling you the long is the play. You went long, right? And this Fibonacci's is just one tool in the chest. And you see how it lines up perfectly? Double topped at it, tried to make it support, broke it, but really it was just this pennant we had here. We touched the downtrend, the top side of the downtrend on that pennant, bang, recovered the fib, and now we're off to the races. Okay, we're off to the races. This is institutional footprint here. This volume right here, institutional footprint. They're going long because of everything I've been telling you. Okay, I've been telling you that it is at least going to be a year before we get in the recession. Now, listen, if something comes up overnight, yes, things can change tonight and we could start a new bear market tomorrow. Anything can happen. But the thing is these institutions know probability, okay? Probability is that, are things that bad? Not yet, okay? Not yet. And will they get that bad? They might not. Maybe in certain sectors, yes. So they're going long until something happens to make them reverse their decisions and not go long, okay? This can be short squeezing with buying. So what happens? What I want to get to is, why does it go up for so long, like Tesla, Nvidia, AMD? Not really, like in the sense, but it did. I mean, yes, AMD went up. Don't get me wrong, but you know how Nvidia just put in that reverse head and shoulders and just climbed and didn't ever look back. Right here, okay. Now we're talking wintertime. Look at that long reverse head and shoulders, guys and girls. Okay. Look at this. Left shoulder, head, right shoulder. And what do? Look at the tap of the neckline. Look how beautiful that pattern is. Okay? Look how beautiful that pattern is. Look at this base to the left of us. This base puts in a base. We come down off the news with China. We don't want to do the delivery with China and earnings. Earnings also. And then you got to a point where, again, earnings again. Look at that. Bang. And then you recover. It comes to a price point that's saying, hey, I think we're oversold here. The RSI kind of told you we were oversold. The RSI also was rising, putting in higher lows this whole down move. That is a footprint of buying the dip on the way down. And they're just nibbling on every low that it puts in that day. They were nibbling. Like, look at these green candles. Boom. Look at these green candles. There's actually a lot of green candles in there. If you look at that, look at these tails. They bought it and then let them sell it off. All right. Look at this one. Boom. That was it. And it's funny. That's probably about center too. If you can't tell, isn't that about center of the head when they started the buying? Okay, so you put in a reverse head and shoulders there, but look what happened. Do you see how, look, this was back in December. No, this was November, guys. I'm sorry, 11/10. This was in our October. This was when the S&P also started, its, I guess, bull market, you could say. So they have been buying, but this is what I want to talk about. This right here, this right here. Why does it not look back? You had a day or two here to short, and so many people just wanted to short it. And what happened? Look, it would go down, and then it would come up, and then it would squeeze. They try it again, boom, they get squeezed. See them tails in there? And you'll also notice that the candles aren't as long as before. Look how tight these candles are. This is important. Yeah, you get a couple there, but this is more after you get downside, they cover the short. Downside, boom. Look, it doesn't work. And they're like, oh shit, we're going back up. But look at that long candle after that. So that is, buying on top of short covering. So what happens is, guys, these institutions have so much money. And how do they have so much money? A lot of this money has been in the markets for so long, and it's just been built. Whether it's from 1950 money to 1989, 1990, 2000s, 2010 till now. There's so much money, and a lot of these hedge funds have it because they, whether it's they sell spreads or, they sell spreads, they go short, they trade, and then they also go long. So they're just like accumulating an ass load of money. Sorry for the language, okay? So this is why it takes so long because, guys, it takes institutions weeks, if not a month, to put a position on. Okay, and then you add on not one institution, but many institutions putting it on. This is why you get this. See how the price action, like these candles are so small, it looks like, but it's just grinding higher. It's because they're building long-term positions. The S&P, same thing, guys. Because I can't remember what the comment was, but it was like, how does it go up like this? Like, what is it? Guys, they're buying. The institutions, not one, not two, not three, all fiduciaries, all institutional hedge funds, they're long. They are switching their positions from net short to net long. When do they switch? Probably not until the end of the year, guys. All right, probably not till the end of the year. You will start to see after, let's say, Powell gives us another rate hike in July. So then by next March, February, March, maybe April is when you see the next big downside if the recession and unemployment starts to tick up. Now things can change from here to there. So what I'm trying to get out is until there is a reason to be short or there's a reason for the market to go down, it's going to continue going up and they're going to continue to build long positions. Okay? Unless you get something with the war. Listen, if you start getting more banks, which we probably won't get them because the Fed has backstopped the banks. If banks have problems or any type of issues, all they have to do is pick up the phone and say, hey, we need you to front us some bonds, or we need you to we have to sell these bonds. Will you take them from us? They still have the overnight repo where the Fed takes what they have, buys it from them, and then returns it with like a really, really small interest on top of it for them to make money. All right. So a lot of that stuff has been backstopped, and you're starting to see we take back the banks. We build a base. We've taken back SVB and stuff. We build our base, and what are we doing? Boom, we're off to the long. So what do you expect next? Technically, you should really, because it's hard to say. We don't know how many more hedge funds, how many more people need to come out of their shorts to go long, or they leave a little bit of their short position on, and then go long to back it up to like whatever the math works out to be. They'll have a quarter short and then the rest of that position long. So no matter what, they're able to, catch upside and downside. Maybe they're easing it, All I have to say is, guys, give it time. So I forget where I was going with that. I was wanting to show you. Oh, the base. Okay, do you see how we put in this base here? See how it's just like flat for like 2.5 weeks? Whenever you get something this long for so flat, always expect either the downside to be just as big as that long base. Like if I were to go, let me draw a line, okay? So if I draw a line right here, okay? I draw a line right here, and I go to like right here. All right? Now if there was a way that I could measure that. Let me do it again. Let me do it one more time, just so I can get the percentage at least, because it's not going to let me hold it there and spin it. And if I can, I don't know how. If you guys want to teach me on Thinkorswim, that would be great. So if we started the base right here, it is giving me the percentages. No, it's not. It's only going to give me if I go up. Shit. So how do I make this thing not so long? How do I make that thing not so long? I know it's a little curved. So how do I rotate this, man? How could I measure this? I could always use my fingers, but you guys won't see it. Okay? No, give me the hand. See, you guys see what I'm trying to do? It's just, oh my God, I want the hand. I want to be able to turn it. I can turn it. No, but see, it comes in and out, so I can't turn it. Fuck, there's got to be a way to be able to measure that move, guys. And look, it takes us right to 150. I'm just going to have to measure it. I'm not going to be able to show you guys on here. There's got to be a measuring tool, though, I know that. But that's what I would do. I would take it, I would measure it, and then see... No, I just want to see if it comes up with the percentage at all. It doesn't. Okay, so guys, again, you see how we build this base and we go to the upside. Now it looks to me we have a nice tail up here. You still have some nice volume. What would you expect to go to the upside more? You should expect another base to be put in. Okay, kind of like how you did there. Okay. All right, and then you go, and then you see how it'll start curling, it'll come back, and then boom. You know what I mean? And then it goes to the upside. So, but that is telling you strength. That is telling you it's putting in a base, it's not going down, and they're buying the bottom, but there's not enough selling to bring it down. And then what happens is enough time goes by, and then boom, you get up to the upside. Best Buy later was thinking 82 call next week. Yeah, Best Buy, yes. Just before I get off, remind me. I'm going to get into the lesson right now. So I missed 2 trades. Okay? This is so important. I want to get into this. All right? Looking back, I should have titled it a little bit different. It's not clickbait. That's for sure. Because it is a huge day. Why is it a huge day? Because today is a huge learning day for not just me, but hopefully for you. Again, if you're new and I cover these things, if there's something you don't know, just let me know and I will help you. I'll explain it a lot better so you can understand it. Okay? I'm going to start off by saying there is a reason why hedge funds, what time is it? 9:52, and I started at 9. So I already went too long. So there's a reason why hedge funds use computers, but there are some people that control the computers that put in like the settings that they want, because the computer will leave the positions alone. Let's go to the SPY. We're already at the SPY. All right. So today, this morning, I knew it was Thursday. I have my, like, whatever. So we have the SPY. What do we have? The 1 minute chart up. So what did I try to do? What did I try to do? Let's go to pre-market. All right, let's go to AutoZone. All right. So pre-market, what do I notice as of yesterday? So I know yesterday I had my high, my low, and my close, which is right around here somewhere. Doesn't matter where it's at. But it does actually, because this is, I think, this is kind of where no, it isn't where I tried. So it looks as though the setup yesterday was getting a little bearish. Like we were going to get our pullback. But what happened, guys? I've been telling you. They've been buying the dip. Now, I took a really small put position here. All right. I was able, right here, it was like right here, right around VWAP. When we rejected VWAP, it was right here on these tails, because we were trying to get back up and we weren't. And what time was it? It was 15:48, 3:48. So I caught this downside. I took a piece off. I took a piece off right here, because once we regained this, what is this? This was an area that I had on watch. Okay. Once we reversed with what? We reversed with what? With volume. Look at this volume. Look right here. Look at the volume increase. We didn't have this type of bar this whole time. All right. You see the volume there? It does pull back on a decrease. And this is the indecision. 1, 2, 3. I'm on a 1 minute. These 3 minutes are almost 50-50 until it closes green here. You see how the bears try to retake it? And then what happens? 1, 2, 3, boom, big bar, big buy volume. Because this is a level, and this is like an area down here where it's like, okay, are we really going to reclaim this? And shorts say, all right, if we don't reclaim it, I can like give it the high of this bar maybe. Maybe I'll give it to the high. Oh, and look, what do you have? Where is the close? The close is even with the tail of that bar. Isn't that funny? Like, I'm just trying. This is the thought of a trader. If I am thinking as a trader. If I see this, I see this tail, I see this candle, I see a hammer candle. We get above this level, and then where are we going? I'm like, okay, we're at the 9 EMA. You should automatically get some sell triggering going on. Well, you do, but it sticks the level. And the candle is small. All right. The volume isn't bad, but it's also not greater than this. If you want to break this bar, you're going to need a volume candle that at least matches that bar. All right. Now this should be red, but you should at least have a candle like that, but red. You want it heavier than this, but also enough to break it. Like, it doesn't have to be much heavier, but you want it to break. And what happened? It didn't. And this was the indecision. Again, they're looking at volume 1, 2, and then 3. This candle right here was like, however this candle closes is what's going to dictate the close. And you'll see it. Like I showed you. Okay, so if I want to get short, but I'm a little hesitant because we regain this level, where is my stop going to be? My stop's going to be the 9 EMA, but really if we get past this tail right here. Because if we regain this candle, that means we're going back up to the upside. We've broken the 9 EMA. We've broken this candle, which is the rejection at 9 EMA. And what do you get next? You get that candle there, guys. You got that candle, an increase in volume right there. Look at the increase in volume. And then that's when you had, individuals take profit or stop being short or whatever, because I did. I took a piece off right here and I left. I just wanted to see if we would gap down. Well, we didn't gap down. It looked like it wanted to, but it didn't. All good. All right. This position was not I was not even close to a full position size, guys. There's no reason, first off, for me to have a full position. There's not a high conviction trade there, is what I'm getting at. I just wanted to have a piece on that if we really got some downside and we could not reclaim, going, reclaim the downside, then I wanted to have something like a starter position started. Okay, because you don't know how the European market, Australian market, Germany market, Italian market, Africa, all of it. You don't know how they're going to take Powell this interest rate hike. You don't know what they're going to do. And we had ECB Lagarde on. Okay, Christine Lagarde, Europe. We had her also. So I'm like, okay, you know what? The risk to reward sounds good. I'm just going to put small people. Guys, they were cheap. Where's the VIX? The VIX is all-time lows. Why not? Okay, why not? It's insurance, guys. So what happens? I take a piece off. Okay, I took a piece off. I think I bought, I don't know, 5. I think I bought 5 contracts. I took 2 off here. Didn't it like almost paid for the position? I'd have to look. But I was down a little bit here today because of the overnight, because of time. And that's why I kept it small. Like there's all kinds of reasons why I kept it small. Okay? The number one reason being this is not a high conviction trade. Like there's honestly no real reason to do it other than if we do start to get downside, you want to have a piece on. That's all. All right. And that's all it was. I just wanted to put a piece on in case we started to see some downside with these interest rate hikes. Again, knowing that I think we still have some upside because because there's not enough time yet. This is going to at least take another year, I feel like. So we come into today. What's the lesson today, folks? The SPY, we come in. I watch pre-market. I'm watching pre-market, guys. I'm like, all right, cool. All pre-market, where are we? We're in a downtrend. We get to this level and it's trading sideways. But that's okay. That's okay. More importantly, we're trading under VWAP. This is a you'll see, usually you'll do this though on the high side of a range. Like if you put in a 10-point range from like 400 to 410, you'll notice at like 410 overnight, like if you wake up and you're still at like 410, 411 and you wicked to try to break it, but it wicked back down, you'll see the downtrend. It'll be like a 2-day downtrend, whether it's 1 day, 2 day, 3 day. You'll see the start of it, pre-market, be under VWAP. See how we stayed under VWAP? VWAP is this pink line, by the way. This pink line is VWAP. We could not break above and hold VWAP. But what changed? Okay, what time is it? 8:30. We got data. We had data. Look at this. Boom. Boom. Brought it back down. They were really wanting to sell because of the reasons I just told you. Okay? Because it just looks like a short setup. Well, something happened. Okay? Doesn't really have to be something, but let's see. We're going to scan back, and this is where it changes. We literally don't look back. That's 8:40, so I don't know exactly what data was that time. Maybe Christine Lagarde came. I don't know, but she still gave. I don't know. But it reversed. No, it doesn't matter why. You know that it reversed. Where did it reverse at? Which is telling me you had trouble. Look here. See how we were at this level and it stayed flat, and then we tried to break it, and it was quickly reversed. Quickly reversed. And you broke not only did you quickly reverse, you broke VWAP. And then you pulled back, I'm sure, to try and test. You just tested the 9 EMA. You didn't even test VWAP. It was just on to the races. All right, so it doesn't matter why it did it. It did it. Okay? When I tell you guys, price action. If you're in the middle of a trade and you see the stock go like how it does in the morning or whatever, how it'll like go down. Let's just say you start out at 9:30 and you get to like 9:50 and it's at high a day, like it's going up. And then you get to like a resistance or like a psychological level, whether it's like $200. You go to $200 and then bang, it just flips the script and starts heading down, and it's not circling back up. Like when the stock gets there, the stock gets to 200, boom. Like it doesn't even look back. It doesn't go to 200, okay? And then pull back off of it, maybe make another run, okay, pulls back, and then it kind of like does something like this. You know what I mean? That's not what I'm talking about. I'm talking about this. You get up to it, and it quickly reverses. That's this. Don't they look identical? How we went down, we tried to bake it, or try to break the level, And then boom, it just went. It didn't even look back. There were no pullbacks at all other than the little 9 EMA pullbacks. You see what I mean? How it was just boom. You had one little one. They said nope. And look at the candle. Boom. Boom. And then it was just small, tight price action, and it was on from there. Small, tight price action. Small, tight price action. I tell you guys that all the time. That is continuation type of day. And me, I should have still put my position on right here. I literally tried to put a position on. I shit you not. It's on the live. Literally right on that level. Right on that level. Because I knew we reclaimed it. We're not going down with this. Okay, and it's still only 9:45, 9:40. Okay? I tried to put a position on. What happened? As soon as I put that position on, guys, now I'm not lying to you at all whatsoever. I literally had my order book up. I go to put the position in. I type in how many candles or how many contracts I want. Those contracts in the flip of a script went from 20 cents to 30 cents. If you don't know, 20 cents to 40 cents is 100%. So in turn, that 20-cent order that I'm putting in goes 50% to 30, from 20 to 30 cents is 50%. So already right there, I'm like, I'm not doing it. Even though Justin should already know, it's a continuation type of day. I have a lot of other things that I use to tell me what's going on, if I can really trust that move or not. Okay, why did I not go and look at some of the things I looked at? Okay, because I was being what is the word I'm looking for? What is the word I'm looking for, guys? It's like I'm not being cautious. It wasn't about being cautious or anything. It was just ugly. Like the decision making was ugly. So let's go back. I woke up. I was good. I was okay. Yes, there's always stuff going on in life. But that's okay. I wasn't in a bad mood. Okay? I found another stock that I was looking at that I felt might have some upside, blah, blah. So, but overall I'm good. And I'm not losing any money. Okay, so why am I frustrated? I got frustrated, okay, because when I went to put in the position went up 50%. All right, and psychologically, I can't pay 50% when literally 1 second ago, 2 seconds ago, and I'm telling you, this thing went, as you can see, like from here to here, it literally flipped the script. I don't know if it was the volume, but the contracts literally flipped the script. All right, even on this pullback, look at this tail. This, you know what? That's where it was. It was on that tail that told me to buy. Because that tail, I was down here, literally at the bottom. That tail popped in, boom, they were up 10 cents a contract. Really, 50%. All right, 50%. In like a few seconds, guys. This was quick. And then you had another upside candle. And I'm like, okay, I missed the entry. It wasn't like, okay, I missed it. I was actually frustrated. But why? Why am I being frustrated? I didn't lose any money. Okay, I tried to put on a good trade because it obviously worked. I mean, look at the SPY. The long side was it. I read the tape right. I read level 2 right. I read the chart right. I read the sentiment right. Okay, why was I getting frustrated? Now, I got sleep. I thought, I did. I know I did. I got a little sleep last night. So there was no reason for me to be like that. So this cost me money in a sense because there was emotion involved. There was emotion involved that distracted me from thinking clearly. It took my head out of the game. And even if I wanted to try and get back in the game, how is my decision making going to be? Do you think I'm going to be able to monitor a position correctly, professionally, and the way it should be done? No, because if I'm doing it here on a trade I didn't even, I didn't take to lose money. Yes, I tried to take it. I had an order right here. Tried to do it. It flipped to the upside on me. So it's not like I put on a trade and was wrong. So listen, and realizing that, like going over it right now with you guys is going to help me in the future. Do you know what I have in front of me? And you guys don't see it? I have 3 words on a piece of paper to try and help remind me. It says read and react. Read and react. I read it. Well, really, from pre-market, I read it. I said, okay, looks like the tables have turned. We've regained VWAP 90 MA. We haven't even tried to test VWAP. Look how many times we tried to test it just here. 3 times, 4 times. You had the data and it couldn't break it. And then it flipped the script. What time was it? 8:39. So 8:40. Okay, time is also very important. Time is also very important. So I took my position on the put. I took it off right here on this low. Because as I was analyzing the pre-market and knowing that like right here after like the 3rd, 4th minute, we're not going back to VWAP. As when I'm starting to sell puts, I know it's going to start go to the upside because I'm selling, like I'm seeing firsthand whoever was short from yesterday what they're doing, if they know what they're doing. Okay, but listen, it is not just us in the market, guys. There are true athlete, professional individuals and computers that you are playing against, that you're fighting against. That's why there's a bell. All right. So you have to not be like me and get frustrated. It's only 9:41 in the morning and I'm already thinking the day's over with. So what does this do for me from here on out? It just messes me all up. I need to just hang it up. Honestly, I should just hang it up. Don't even try. I just got into something that was really important in my mind that I was wanting to say. Now I feel like I forgot it. So see if it comes back to me. So just like I said, as knowing that the positioning is going to be to the upside, okay? Knowing we have like this price action, like you don't have candles whipping around. Like this whipped around a little bit, but not really. All you did was just try to go, they just put in a little base, tried to break lows, couldn't do it. Then everybody gave in and it was to the long side. So not being able to control my emotion for what reason? I don't know. This is why they do it with computers, guys. Like I have no reason to be irritated. Like nothing personal. I have nothing going on in my life that should have me get irritated. It's because I want to perform in a sense. Okay, I want to perform because I know there's that like this. It's because I know it's Thursday. Also, this could be it too because I know it's Thursday. I know I've been sitting on my hands because I wait for my chart pattern. I wait until it comes to me. I don't go to the market. I make the market come to me. Okay? I let the market come to me. I say, all right, you want to go long? Let's go long. So it is hard for me, okay, because of the way I trade all kinds of different ways, okay? But today, I just wanted to put a trade on and get green for the day and just have a trade on for this long. All right. I had to get my price right. Price was going to be all. My entry was going to be all. Now, these are things that I also work on because you need to work on your entries and getting them right because you're going to start seeing that you're going to lose less money if you get your entry right and you're going to make more on the trades that you're right on. Okay? There's so many reasons why just taking a day, practicing entries, and physically knowing that if you're trying to do something and you're in a trade and you're getting frustrated, you should just like dial it back and realize what it is you're doing and try to change. And if you can't change your emotion, then you got to like hang it up. So the SPY went up. We had the right decision, missed it, all because it's hard for me when I go to do something, and when I go to do it, it changes in a 50% manner. It's a little tough for me to do that because now my risk is kind of off. Why though? Because I know we could have trouble at high a day or the previous day's high. Okay, this thing could go up. It could even circle around right here. This is why my entry is important. What is that level? If I scan it back, okay, that is the base of yesterday's high, which is a reverse head and shoulders. Okay, or not reverse, but it's like a minor head and shoulders. But it's also resistance from the day before, guys. Do you see how important that level is? Like these two levels here are important. All right, they're so important. Look, it was after hours resistance. It was yesterday's pre-market resistance. Resistance. All right, well, it tried to be support and then it broke. So that is a sign to me. It was trying to make resistance into support. It broke. It tried to reclaim it right there during Fed Day, and it couldn't do it. And that's another reason why I went short that day. See how it tried to reclaim it? And look at the candle. Boom, brought it down. So I know that level is a level of resistance. Probability says that level is going to be resistance, guys. Probability says that this level is going to be resistance. It couldn't take it yesterday. It tried twice. It held it for a little bit, broke below it. I showed you it came back all the way from the lows to retest it and quickly reversed. So psychologically, that's what I have going on in my head. That is why I could not take a long here. Now I'm irritated because I tried to put the position on. My plan was take a quarter, if not half off, depending how much they paid, right there in front of that level, like right there. My plan was to take half off. I've not only paid for the position, but I'm green. Okay? And then I let it play out. Okay, and listen, that is all before, like, this is what we see. This is what we see. Let me do this. All right, this is what we see. That's all we see. We don't know. Look at these tails that are there. So we have support, you have some buying, you have the tail. I try to get in and it quickly reverses. Okay, too many. So, again, I don't see it's doing it too much. So all I got to do is do this, guys. I do apologize. So, that's where we're at. Justin tries to put a position on right there. Does it goes up too fast. Like, as soon as I go to do it, people were one step ahead of me, and they put it on. So now we turn that into support, but I want to know what we do here. Because I know on a daily that this is going to pay me a decent amount that I can take profit off in front of this. And it's only a short distance. It's about $1. You know, it's like 75 cents. And then we get that. You get a little tail with rejection. But I'm already irritated at this point because from here to here, it's up 50%, guys. So it's a little difficult to say, yeah, I'm just going to go long in front of this level that might still be resistance. Even if we break above, it might roll over. But even though I seen pre-market that we had nice tight price action and reversed to the upside, and it was a long day, that I don't remember because I didn't either it was because I didn't write it down. I just wanted to see what I wanted to see. I was more focused on getting the trade on and taking half off right here, whatever. You know, I had a plan, and that plan took me away from what was really going on. All right, this is what I'm trying to explain to you guys is you have to take notes, whether it's writing it down, see what your thoughts are on the day in this area. Like what time is this? 9 o'clock. So at 9:15, write down what you think the day is going to do. You know, it's easy, man. That's what I say. It's so easy. Yeah, it can. All right, but if you go back and work on it and do exactly what I'm doing now, we won't have that issue because we'll be able to say, you know what? In order to not let this happen again, and look at this volume peaking up pre-market too at that. we're going to write this stuff down and we're going to say, we worried about 75 cents on a day that could have been insane, all right, on this one trade, or just, just on the SPY alone. We forgot about what was really important. That is this, all right. I'm getting long because I think the whole day we're going to go up. And even like we finished 1.2% higher, like we were probably, I don't know, 40, 30 here. So there's still a lot of upside to go, if I'm right. So I don't know what it's because I didn't write it down, guys. I didn't write down. I think we're going to go long today. Like, okay, yes, it's hard. If the contracts went up 50%, okay, so be it. All right. Maybe you dwindle your position size back, buy less contracts, because if they're going from 20 to 30 cents from there, then there's probably a chance that they're going to go to 40, 50, 60, 70, 80. Okay? But the psychological buying where I had it, or putting the orders in, getting it, and then seeing it already go 50% psychologically messed with me. And it took the game plan away. All right? And then we missed that. All right? So that is another thing. Knowing when you're getting irritated or frustrated, or if you come into the day like that. You can't come into the day like that, because if you do, you're not going to perform. And you're fighting the best. All right? You're going up against the best in the world. Let's go to AI. So we could have obviously had a nice trade, let this thing go to high a day. AI is also important. Why is AI important? Because we were too busy worried about the SPY entry. And what did we miss? And again, this is where it gets really frustrating. Why does it get really frustrating? Premarket. So what happened? So this morning I'm looking around all over the place. I'm like, man, I don't really see a setup. Like I'm thinking like, all right, so today is going to be like, I'm just going to have to wait. Let things play out. Well, I remembered. I'm like, AI. Let me go see what C3 AI is doing. So we get C3 AI. I said, oh man, I'm looking at this. I'm like, I really like this chart. What do I see? Just for starters, I see yesterday a double bottom. This is a 15-minute chart, guys. So I see a double bottom from yesterday. The day before, you had a nice rally, and it hold this level. There's like two minor levels here. We'll call it one area. We held it yesterday. We come into the day, and we come into the day, and then I see this. Boom. Boom. We put in another double bottom right here. All right. This is when I'm like, whoa, wait a second here. I think we got something here. This level is key. So I know if I get long this stock, where is my risk? Like, where's my stop loss? My stop loss is probably at most like right here. And what is this? This is about roughly $40.99. So we'll say $41 to 40.2. Wait, 41 to 42. So that's like So 41.04. We're going to say 41. It was 40.99. Yeah, 40.99. So I'm only risking like, okay, so yeah, at most $1. At most $1, gang. So my risk to reward now, but the thing is, okay, we go to the open. Let's just go to the open. So we open up here, blah, blah. Now I'm watching the SPY. At the same time, I'm watching the SPY. But I drew this pennant. Okay, I drew the pennant. I said, I think we're going to break out of this pennant. So instinctively, I say, I am long AI. I want to be long in this area. Why do I want to be long there? Because look there. I'm sorry. Look there. So you regained this level right here. This was key. Sorry guys. Right here. Right there. You turned that resistance where it broke it, pulled back, turned it back into resistance, and then you had your down afternoon. Well, it never broke. Like, this is what I'm noticing. I'm like, oh, okay. So it's just grinding higher these past couple of days. Really small price action. You get a nice breakout through this level, and what's it do? It sticks it. This is what I see. Just before I look at pre-market, I see that. I see a breakdown and a hold, and it's just grinding higher. Now, if I go to the left, I'm sure there's even more support here. Like, this was an important hold. It's grinding up, and then, but what happens, guys? What happens on the break through this circle? Look at that volume, gang. That is a break with volume. So what do we know about breaks with volume? I preach it all the time. If you break a resistance level with a higher volume than you've had in the past, okay? Now, consecutively, these candles mean a lot because there's quite a few there. It's not just one, and then you had two. All right, this is, honestly, it's 1, 2, 3, 4, 5, 6, 7, 8. Like, there's volume there. It's high volume. Let me see if I can bring it in for you. I got to do this real quick, okay? Because this is so important, guys. These are the little things that you need to know to be able to pull the trigger. At 11 o'clock, boom. It breaks it, guys. Turns it into support. Goes back to the upside. This is a reclaiming. So now, I'm thinking if I'm short. So what do you do during a trade? You want to look at a trade, say, if you think it's long, if you're like, I want to go long this stock. Okay. I want you to look at the chart and tell me if you were a person if you were going to be short, where would you short it, and does it have a short setup? Look at it from both long and short directions. Okay? If you can't come up with a reason to be long, it's probably a short. If you can't come up with a reason to be short, it's probably a long. And if you come up with 2 reasons to be short and 5, 6, 7, 8, 10 reasons to be long, the probability is you need to be long. So I see this break in volume. Let's go back to the beginning. I see the breakout. We get the volume, especially here. Boom, we break out and immediately reject it. But we pull back into an area of resistance, and it sticks it. Boom, boom, puts in a small double bottom right here. That's 1, 2, and then what happens? It grinds. I know this stock has a short float that's pretty high. This stock is pretty heavily shorted. And I know if this thing can get going, it will get going. The SPY, what was the SPY doing? What was Carvana doing? What was the Qs doing? So the overall market is long, like to the upside. So this broke, and now it's holding. It held yesterday. You put in a really nice double bottom yesterday. We come in pre-market, and what's it doing? It's holding again. It puts in a double bottom pre-market. Okay, it puts in a double bottom pre-market. Boom. Boom. And then it opens. Okay, it doesn't put in this green candle that opened. I mean, it did on the 15-minute chart, obviously. Look at the volume. Look at the volume on the breakout, blah, blah, blah. So look, again, that's all the reasons that I decided to say, hey, I seen the pennant as well. I see, hey, we're putting in a bull flag on a multi-day resistance level with a break above the resistance level on a nice, solid, concrete volume to the, on an increase in volume. That's really concrete. It's not just 1 or 2 bars that have brought this. This is 15-minute bars, mind you guys. I'm on a 15-minute chart. Okay? So you got 15, 30, 45, boom, 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 boom. Like, that's a lot. That's a lot. So that right there, the volume, the break of the resistance tells me, along with it not breaking further there, it didn't break down from there. Okay, if this stock was going to be weak, if this stock was going to be weak, guys, it would have done it right there. It would have not held up right here. This told me the buyers were still in control, guys. Now, I'm sure if I go to the daily, there might be something there. There might be a 50-day, a 100-day, a 200, a 20-day, I don't know, a 14-day. But it doesn't matter. There's a double bottom here on a breakdown reversal, and it holds. And it grinds up, and it grinds up. You got a 2-day continuation to the upside. Then we get our resistance. It doesn't break down further from here. It doesn't go down here. Then that's going to be a weak stock. All it did was break support and turn the support into resistance, and now you look for the downside. Nope, it holds. It held the prior double top right here and right there as support right there. Turned resistance into support, and it's grinding higher. So all these things, this is my game plan. Long AI because of this. How I'm drawing it out for you guys is the stuff that I go through as I see a chart. And it's not just the pattern. It's more than the pattern, guys. You guys got to dive into it. You have to put in the work and really come up with the reasoning. We come up, rejects, double bottom. We're grinding higher to resistance. It doesn't turn support into resistance. It literally is like, nah, I want more of it. I'm not breaking down. That's not a break and retest. That is a break and retest and hold. It's just holding up here. And finally, boom, it breaks to the high side again on a huge increase. Concrete volume, like where it's there. And the shorts know it. So if I want to be short, I don't even want to be short. The only thing I want to do with this stock is go long. So if I'm feeling that way, I know whoever is short this stock is getting antsy and getting nervous. This thing held again today, guys. Where did it hold? I'm going to put a line there. I'm going to expand it out because we might get a day 2 continuation. All right, we might get a day 2 continuation. It's going to be a little tough, but it did hold that level. That's the pivot high, but it tried to hold it, whatever. There was so much, and I said it in chat, guys, there was so much money on this move because it just took off, guys. Guys, it took off. And when I tell you this thing took off, it really took off. So let's go through the trade. So I put it in. Now, I don't know what I'm going to expect in the morning yet. Okay? So if we pan this out, I'm going to go right here. Actually, I'm going to go right here, guys. I'm going to go right there. That's what we have going into the morning. So right now, I don't know if we're going to break this upper trend line just yet. And in what manner. Because we haven't broke it yet. It's still the morning. But I do see a double bottom. Boom. Like we're holding it. I'm really liking this long. So what do? I got it on my watch list. I'm watching the 1 minute chart. I'm watching 3 minute, 5 minute, 15. But the thing is, guys, is I'm watching the SPY. I go to take a position on the SPY. I get messed up on that. What does that do? What am I doing there? If I'm watching the SPY, I'm trying to watch this, and then Carvana's going off. What does that do? That is distracting me from what is important. It is not. It is me leaving this stock that I need to be watching what we do here on this uptrend or the downtrend of the pennant. I need to not worry. Well, I could have the SPY up, but I don't need to be worried about putting positions in on the SPY. That's if I'm wanting to look at the SPY and go long the SPY, then I don't need to be looking at AI. So for me, as learning and getting better at this, I not only am irritated about the SPY. I go to this. Okay, now I'm already irritated. Like I shouldn't even be like I should just hang it up. But it's the type of day where I know like you got to get on. Like you gotta put your position on and get your product. Like now's the time. You have to perform today. Now, things are happening. So let's go to the chart. All right, I'm watching the SPY. I go to put in my calls on the SPY. Bang, 50%. I would have got fat fingered, but the fat fingered would have worked out. Okay, but that still would have messed me up emotionally for the ride up because of, again, the resistance I showed you guys on the SPY. So what do we have here, guys? So I go to AI. I'm flipping back and forth. You guys can go to the live stream. I call it out right here. I call out AI right here. I say AI is probably a long. What do? I go to the contracts. All right. So if I go to the contracts, I also not only have to go to the contracts, get my order. I got to find out what contract I want to be in. That also takes a little time. Doesn't take much time. Let me take a drink real quick. Sorry. Again, it doesn't take much time to get in the right contract. Okay, but I do that because I want to be in the contract that's going to pay the most, that's going to be the liquid, that's going to give me the best risk to reward. So what do? We pull out the old handy dandy fib from the low to the high right there. Boom. So let's go to real time. I have demand, which is up here, and I'm going to start playing this stuff out. I'm going to start recording during the day as of Monday. So we have this. We have the upside. Boom. We're putting in tails. All right. So guess what? Justin doesn't necessarily recognize the tails, like this tail, that tail, this tail. Yeah, there's an indecision candle right here. But more importantly, what do we have here? I have the 23.6 fib. I think I also had the 2 minute and 1 minute chart up. I'm almost positive I had the 1 minute and then I switched to the 3 minute. And why do I know that? Because of this. Because even on the 3 minute, it looks a little different now. But so I pull this out. What do we have? We have a break. We have a reversal. Like we go up, we reject, we come back down. Okay. What is this, guys? If you guys don't know, what is this right here? You can say it's a double top. It's not what I'm talking about. It's not necessarily a double top. This is an initial morning high. You have an initial morning high right here. This breakout candle and then the first pullback. There's your initial morning high. What is this? That is your initial morning low. Okay? Because you grinded hot. Like the first move up got rejected. It's not that it got rejected, but it got rejected. It pulled back. Okay? On an increase in volume. What the volume is not important. So there's the high of the day. So what do? We can just put a line right here. We'll put a line right there. High of the day. Boom, we come down and we bounce. There is the low of the day right there. Okay? So we have the initial morning high and the initial morning low right there in 2 minutes. And then we start grinding higher. We quickly, not as quickly as we retook the downside, but we retook the upside in a manner of which it, kind of consolidated. You know what? I also had it up like this for a reason. Like I said, sometimes I use pre-market, sometimes I don't. All right. So we have that initial morning high, initial morning low. We start grinding up. All right. Let's go to the 3 minute. I'll just leave that up. Let's go to the 3 minute because that's what I was using. I was using the 3 minute for this trade. Yeah, right there. Bada bing, bada boom. Just like that. Okay. This is where it gets good, guys. I promise. So I'm already irritated and frustrated about SPY. Kinda. Alright? Or like I'm off. So what do we have here? We have the initial morning high. Technically, this could be the initial morning high right here on a 3 minute. However you want to look at it. There's the initial morning low. Remove oval. Remove oval. So on the 1 minute, we have the high, we have the low, but I was on a 3 minute chart, and that's what we're going to stay with. So you have the initial morning low put in, and we creep up. What happens when we creep up? We're getting an increase in volume. Look what happens when we break, I don't know if you guys can see that or not. I can take the Fibonacci off, but it's right there on the 61. That's the tail. All right. So we break it and it holds it. There's the line. You can see the white line. I'm just trying to make it easier for you guys to see. I can't really picture it with, if you guys are on a phone or something. So anyway, what happens? We blast through. We quickly reverse. This is why you should use different time frames. We look at the volume, gang. Look what happens off of the reversal. Look at that. Boom. This is where it gets good. But Justin's looking at the SPY. This is right around 940 something. Right here is where I try to take a trade on the SPY. Doesn't matter. We're looking at AI right now. But I turn to AI. I have them both up on my screen. AI and the SPY. So I can see them both at the same time. Guys, this is a picture perfect trade. You need to take every single time you see it. Okay? This is where it gets good. Right here. We break the high, initial morning high, on an increase in volume. Okay? And what happens? We extend to a new high on an increase in volume. Look at the pullback. Alright? Look at that pullback. I even tried to draw a flag on it on the 1 minute. Where I didn't try to draw it. I looked at it and I'm like, yeah, it's not working out. So I erased it. Guys, this is so important. Look at this. Again, this is a grade 8 setup. Every time you see it, you need to take it. You have a grind higher on an increase in volume. And look at the pullback. Look at the low volume pullback, guys. Look how low that volume was. And that's when I said, hey, guys, we might want to be long AI. We set it pre-market. We called it out pre-market as an idea. Now, going into the day, I wasn't sure if I was going to have a trade or not. I let the market come to me, and you got to do the same, okay? Sit on your hands until the market gives you a setup. All right, so if I'm saying we got a long here, where am I going? Where's my target? I already have 50 as a target on AI because I played it 2 weeks ago. All right, I played AI 2 weeks ago. I've played it multiple times this year. This year, I've probably played AI 4 or 5 times this year. On the first breakout run, on the second one, and this one. Well, which would be the first one and then this one. So, we have a decrease in volume, and this is when I jump back over to AI after I didn't get a fill on the SPY. And I say, guys, I come on the microphone. I come on here. I am irritated, so I'm not thinking clearly. I'm not going to be able to execute in that state of mind. I'm irritable for no reason. I didn't lose money. I didn't take a trade and it went south. Guys, low volume, right? I swear to you, go look at the live stream. It's like 20 minutes in. Where are we at? 30 minutes in. How did I know that? Because I rewatched it. And literally, right on the 9 EMA, what do? I bring my freaking options chain up, okay? And I literally go to get long right there. And what's it do? Because of this. Look at that decrease in volume. We had an increase through the break of the initial morning high, or even if you want to call it this one, we had a break with high volume through this initial morning high, whichever one you want to call it, this one or that one. Look at the volume bar through the high. That also lines up with the break out of the bull flag, which is right there, guys, on the increase in volume. Look at that. It breaks through that on an increase in volume. These are all signs to get long. But guess what? I don't go this deep into it because I'm not thinking clearly. The SPY messed me up. I physically was emotional, and you have to not be emotional when it comes to trading. You have to sit, stay focused, come up with every reason for your game plan, and dot your I's and cross your T's, and in real time, do this. Do exactly what I'm doing. Oval. So, I see the volume, I see the candles, I see this increase in volume through the break. I'm like, okay, so maybe we get a pullback to hold and then go long. So what did I say? So I'm looking for, I drew the circles on the charts, guys, in that live. You guys can go back and watch. I drew the long right there. I drew the long. I said, we're going to be long right there. Can even pan it up because none of that shit was there. And I was literally like, we're going to be long right here. We got the 23.6 fib, you have the 9 EMA, and you have VWAP all meeting up right in the same area on an increase through the break of the initial morning high. Okay? On a decrease in volume on the pullback. Guys, this is a grade A setup. The pullback. You pull back. You pull back on a decrease in volume, and then what do you get? Then you get the humongous run in literally, I'm going to put this to a 1 minute candle. Look at that volume. That increases through this initial morning high. It did not crack below it, but it was greater than this, guys. I'm going to bring up a 1 minute chart and look at this 2 minute candle because this was in literally 3 minutes, 2 minutes. You were up 200. These contracts went from 50 cents to $1.25, $1.30, and then went on to hit right here, right at that, right underneath of that resistance level. They were at $1.50, guys, $1.48. The spreads were pretty tight in the options, and this is why I got in a little late and missed it, and it ran. After this, I could not do it because I was going through it and going through the options chain to figure out which ones I wanted to be in. Okay, but guess what? I should have done that this morning when I decided to be long. I should have already been doing the work. But instead, I was looking at the SPY. I was looking at this. I'm doing too many things at once. Okay? I'm doing too many things at once. This is why I missed my trades. And I also wasn't thinking clearly. And I was emotional. This is exactly what you do not do, or you will not be successful. You do not look at 3, 4 different stocks. You can have 2 or 3 that you're watching, all right? But on a day like today, when it's a high conviction upside day, and you're just getting this blast of momentum, you have to get on because at least the way I was going to trade today, my entry had to be perfect because my take profits were literally on the break of that. I'm taking a piece off right there on the break. My next piece is on the extension, and then my next piece is just under that resistance. So as it's grinding higher, like that's why you see this tail, because people are taking profit in strength. They don't take profit on weakness. You take profit on strength. Okay? And this is a full position side because it's a grade A setup. And because I did not go through the options chain and see which ones I needed to be in, I had to do it in real time, and you don't do that. Just like you don't go and try to find support and resistance when the market's open. You should already have your support and resistance. All right, you should already know where your take profits are. I knew where my take profits were. All right, I don't have to think about where my take profits are. I know through the break of this, I'm taking a piece off. And then it extends because it could just break it and then just sit and hold it. All right. And then go higher. So until I figure out what the stock's really going to do, you don't know that it's going to blast through there. Yeah. Once it blasted through there, the tape went nuts. The level 2 was going crazy, but that's after the fact. So what do? You guys need to learn to take profits in strength. And what is that also going to help you with? That is going to help you with getting the best fill and getting the best profits take home when you're taking profits in strength. As it's ripping to the upside, you're taking a piece off and you're getting that fill because people are getting in and they're going long and they want in now. This is when you get market orders, and you're going to, more times than not, you can just market order in and you're probably going to hit the ask. Or just under. It's probably going to be just under it because you're going to pay commission. So it's going to look like you didn't hit the ask, but you did, but you're paying commission. So you have, whether it's 50 cents, $1, $2, $3, whatever you guys' stuff is, So This was an A-plus setup. I needed to, listen, I did not lose any money, okay? I did not lose any money. All that happened to me on the SPY was I got fat fingered. It wasn't that I was too slow. It's like I just missed the trade, okay? Now we can say the trade went okay. We can say that now because it's already happened. But in real time, you don't know you're going to get that extension. The probability of the extension was there because of the candles on the SPY and everything that led up, everything that I explained that led up to it. Yes. But you don't know that in real time. And in real time, your mind's going to think of all kinds of different things. All right. So what did I do? What did I do though? What did I do? I did take a small ride on AI right there. Right on that. Because I said we went and broke it. We put in this double bottom, and it wasn't a home run trade. See the double bottom on VWAP? After we reclaimed VWAP, blasted up. Now, I was still on here and talking about, I'm like, shit, so we did break it. That brought my attention back. I got long right there, but what did we get? Look at the volume. So I was like, shit. We got that right there with the volume. I went in small because why would I go in? Jesus Christ, this is going to piss me off. Why would I go in small? Come on. Jesus, I'm sorry, guys. But look at the volume, gang. So when I got in this, right here, after I got my attention, we had the bull flag. I put I'm buying right here, as close to this 90 MA as I can. All right? Look at the volume. It's decreasing. If you have decreasing volume through what? The high of the day. What is this? That's the high of the day, and we're working up to it, and we have a decrease in volume. That's a no-no, man. See how we broke it? You see how you broke? And what did you not get? You did not get the extension follow-through. You did not get... You could still pull back, make it support, but if you got volume, bang, you're going to get that. But guess what? You didn't. Look at the volume again. What's the volume doing, guys? The volume's decreasing. That is why you did not get what you got back here in the morning. Because in the morning, you went through initial morning high with volume. So what does that do? It means the probability of it turning into support when it is resistance. It means that it's going to turn it into support if the volume is there. Bang, you got volume. So what happened? It pulls back. Traders get in. They see this. They see that they missed it, like me. But I did try to get in right here. Puts in a double bottom VWAP. Boom, extension. That brings us all right back in on the trade. But what happens? We get this. We get another little bull flag. But we're still riding the 90 MA on the borderline of consolidation at the previous high. At the high of the previous high a day. It's not the initial morning high. It's the previous high a day. High of day. Because that's the high of the day. What are you getting the whole time you're going up, guys? The stock's going up, but the volume is going down. And what time is it? It's almost lunchtime, guys. It's almost 12 o'clock. And what do we call this? This is a lunchtime breakout. Literally, it's like 11:45, so a little bit different. You had this nice volume bar, but the volume was not more than this. The volume was not more than this at the high of the day. You need a candle. If it was really going to give you an extension breakout, that candle would at least had to be like that. Like at least matching this. You would have had to have like something really going on. But again, you didn't. Decrease in volume. Decrease in volume. I took it off. And I didn't even go in small because where's my target? My target's right here. I don't have much meat on the bone now because I wanted to get in down here and was taking profits up this way. So I hope that's a good explanation on how you got a breakout and then you got a failed breakout. Because look at the volume. Look at it. You pop up, hold 90 MA. The whole time you're grinding higher, the volume's decreasing. You get a pop, and look, what else do we have? Look at this volume compared to the volume bar next to it. Look how low that is, guys. Right there is where it's at. Look, it's still an increase in volume, but it's still less than what this is. Less than what that is. That's a sign of just going to be consolidation. Stay away from it. You missed the trade if you didn't get it. Just fall back. Unless you got like volume bars that are like, you'll know when it's on and rocking. You just look at the volume, and when it pulls back, if you get a decrease in volume, like this is clearly, you can see this clear as day, guys. I mean, you can see it clear as day, even real time. You get the pop, and look at the volume. It's so low, but you're going higher. You're putting in little bull flags. You're putting a bull flag in there. Boom, got long. Another bull flag right there, right there. Another pop out of it on all decreasing volume. And I said, nope, it's over. This is where you had to get long. And I swear, guys, I promise you, it is live. I have it live on the stream. You guys can go back. Right there was my entry, and it ripped higher. And in 2 minutes, this thing was already up 200%. It is hard for me to get long a stock that now I'm paying 200% premium in. Chances are I buy that, I'm holding the bag, and now I got a loser because now I got to worry about the drawback. So if I'm buying up here, okay, where do I have to give the stock room to? I have to give the stock room all the way back down here, all the way back down there. Now my risk to reward is not working because here's my take profit. My take profit's at 47. Like, major piece is at 47. The 47 is the target. So I'm at what? Like 45 right now? So I have $1. Oh, shit. No, not even. I'm at 40. 45. So I have 80-cent downside versus like $1.25 upside. No. That's how you will over time lose money. You want 2, 3 to 1s. 2 to 1, 3 to 1. This down here gave me meat on the bones. I was buying it at $44 with, I don't know, it technically went up to 48. 50 is the target. But this risk to reward, guys, is here. This is your risk to reward because you've been proven already that the stock is pulling back on low volume and the buy side volume is only increasing as you're going. And what happened is the fact that why this did not make a lunchtime move is because these traders made so much money getting in here on this pullback and got this extension that they didn't need to. They made so much money on this run up, guys. It paid so much. Just this candle was over 100%. Just that candle, guys. This is a 1 minute candle. If at the top of this candle, because it went so fast. When I'm telling you, this thing ripped up, go watch the live stream. Go to the 25, 30-minute mark and go watch how fast this thing rips up. Go see how I am emotionally. And why am I like that? I haven't lost money. I haven't put a trade on to lose money. So I don't have a reason to be upset. It was just, maybe it was the one, and I was just upset. I didn't get the order. Then I should have moved on because I was handed a second opportunity, and I didn't know that, because it's not, I don't live in the future. I'm not a fortune teller, So I didn't know that I was going to get such a clean setup like this. But this is why you got to just remain calm and stay focused. And if you're watching a stock that you have conviction in, guys, try and just focus on it. If you have like one or two other ones, okay, but pick at least one stock that you have major conviction in that's going to still give you, that has meat on the bones. Like, don't just look for like $2, $3 upside versus like your risk. Like, what's the pullback? Like, what the stock can also pull back to where, and it still doesn't mean that you're wrong. It's just going to pull back to support, find more buyers, then to go to the upside. Like stocks pull back and then go long. Like it went up, now it's consolidating, it pulled back. Doesn't mean you're wrong to go long. You shouldn't be because the volume's decreasing, but it can still go to 50, but it doesn't go up in a straight line is what I'm saying. You have to endure pullbacks. You need to buy pullback, buy on a mix of weakness, sell in strength. Okay? That is the lesson. If you guys want to, go back to the early morning. It's like 20 minutes in. 15 minutes in, go to pre-market if you want. I called AI out because I seen it like, I don't know, maybe it was like a couple minutes before the bell, maybe like 9:20 I seen it. But here's the other thing. What goes on with this? Okay, why did I pick AI? This is what I want to go through this real quick. Okay, I know AI, the sector in and of itself has been pretty strong. Two, I know there's been a strong, I've already said this, but there's been a strong, there's a big short interest out on it. So if this thing gets going, these shorts have to cover, and then buying on top, which should send this thing going like it did this morning. Okay, what gave me the fact that I thought it was long? I went over that. Like I had this written down. It says pre-market setup / multi-day setup, high volume, overall market getting squeezed. You had Carvana, Beyond Meat, you had all these other stocks, you had the SPY going higher. So this is telling me the sentiment is to go higher. Now, if I'd have had this written down early morning, I'd have been okay. This is part of the playbook. Okay, and what could I have done to enter? Could I have just put it on real quick and dwindled my size? I mean, I could, but technically I couldn't, because the whole reason why I wasn't able to get in is because when I went to press the button, it's not even when I went to press it. As I went to fill out the amount, I put in 10, it was like 10, 12 contracts. It was 10 contracts, I think, because I was just putting the position on because I was already irritable. I'm putting the position on. I put to get 10 contracts, all right? And then it goes, like the price, when I looked at it, from 50 cents, guys, I swear to you, right here, it was at $1.25. I'm like, whoa. This thing is up over 100% now. What happened? And I look, you can see in the live stream, I look to the right, and then I see it going, and then it extends again. This is a 1 minute chart. On this candle right here, you're just about at like 180%. This candle was just under 150. Oh no, it was at 100%. Yeah, it was like, so the contracts were 50 cents right here when I was getting in, and then they went to 120, they went to $1.20, $1.25. And then they went to $1.38, $1.45 here, or right here, and then they were at like $1.50 something on that extension, and then it pulled back. So it is really hard for me because my entry is important. Why is my entry important? I have to go through this, guys, even if it takes a little bit. So if you guys leave, okay, that's fine. But if you really want to get good at this, you need to hear this stuff and really soak it in. Where's my stop loss? That's the number one question. Where's my stop loss? If I'm getting in right here, where's my stop loss? My stop loss needs to be, technically, I could still be right on a pullback down to here, down to this downtrend, the high of the day. I could technically, I'm still right if the stock pulls back to here. But because all I'm looking for is a trade for an extension, it might not be a scalp. It might turn into a scalp. It would have turned into, I wouldn't call that a scalp, but I'm giving it under VWAP because I know it's holding the 9 EMA. If it breaks VWAP is where my stop is, but in the manner that it breaks it, okay? Like I can read it. This is what gave me my conviction. Right there, the upside volume versus the consolidation and the decrease in volume. That is what gave me the conviction to go long there. And I say, you know what? If we can't break out from here, I'll give it to VWAP. My stop loss will be a little bit under VWAP because we could pull back to VWAP. Oh, well, I had my Fibonacci up too because the 23.6 Fib was there. Everything was lining up right here. And if it ended up breaking down, like, I'm good. I'm out. You know what I mean? I'll look for another entry down here at the high of the day. So that was important. Like, that's why I can't buy up here, because now this is my risk and this is my upside. Okay, that's my upside from here to here. Okay, and then my downside, my risk is even worse. That's my risk to my reward right there. That's not right. That's more risk than reward. You guys see what I'm getting at? So that's the frustration, and that's kind of what I was getting at with the SPY. I have my targets. I have my support and my resistance, like the SPY. I knew I only had a small margin there. And I was going to say, if it broke the level, I was going to be out. I was going to risk 10, 15, 20 cents to make $1.50, $2, $3. But I also knew we could have had some extension to the upside throughout the day too, though. But I missed my entry. Then I got emotional. I wasn't thinking clearly. And I wasn't thinking clearly because I fucking took a long right here. We got the breakout. I took the long here, then just took it off like right here going into that on decreasing volume. The whole time I'm in it on decreasing volume, I'm like, why am I in this trade? What are you doing, dude? Like, it caused me, the emotional caused me to do stupid shit. So you guys need to think about that, all right? And if you find yourself forcing a trade, I don't know, come in chat. Say something in the chat because we'll help you not do that, all right? We will talk you off that cliff. Fortunately, it worked out for me because it was probably, I don't know, a few dollars that I made, when you add on commissions, but it could have been red. I could have been red, So again, I'm going to wrap this up with, there was no reason for me to be irritated or whatever. I missed the entry. You have to just move on. You didn't put on a trade and were wrong and you lost some money. Even then, you're going to lose sometimes. It's okay. Even if you're wrong a few times, just know where's your stop, where's your target. Those are the two things you should be worried about at first. Does the risk match the reward? Okay, if I got $1 downside versus $3, $4, $5 upside, all right, let's run it. We'll put on a piece. You can always put on a quarter of your position. You can buy 1 contract, 5 contract. You can buy the stock itself. That's another thing. I'm sitting here thinking about options. I'm like, wait, I could just buy the stock itself. I could have bought 1,000 shares, 2,000 shares, and just bought the stock itself and just about got the same as I did on options. Now with options, I'm fighting time and, but I was also looking for that breakout. I was looking to keep options also help. I'm not going to say they help you manage risk, but they definitely do if you use them for the right way. But there's a time when you should use options and a time when you shouldn't. Again, this should only be for experienced people. This kind of stuff takes time. You need to know when you should be buying options, when you should be buying the stock. Like, you need to know what kind of options you're going to buy, what's going to put you in a position to, maximize the reward and lowers your risk. Okay? If you guys want to come join us, we're live Monday through Friday, 7:30 to 4. I'm going to go cover Best Buy for you, Collins. What did you think about that lesson? I don't even know if you're still here or not. I just hope people could find that, find this really useful because I think this lesson is really useful. It all goes back to being emotional. And being emotional, first off, it also goes back to not concentrating on the one trade that I had conviction in. I had some... so let's proceed. I just hope this was a good lesson though. But the more important thing is the chart setup for the long. That's a really good setup, The whole reason why I've had conviction to go long and then the setup that it put in today. Look at this volume. Look at the volume on that breakout. It was the most that we've had. And that's why they paid so much. Look at that. That's insane. Yeah, man, I just hope it was good, man. Could you see what I was saying? I hope I explained it right. Like, this was a perfect setup. Yeah, you had an extension, but you hung it up here. The 23.6 fib was there. With such low volume that it was noticeable. And that's what happens there. Okay, people that are short, they see that. They're like, man, I got a decrease in selling volume. Okay, and I got this 23.6 fib lining up. Lines up with the 9 EMA. See, I don't know what happened here. Oh, that's because I was on the 3-minute. See how it looks different on different time frames? Yeah, I'm finding support here. You have VWAP, meeting right here at the 23.6 fib. But on the 3-minute, let's look at it on the 3-minute. So this is why I use different. See that? Look at that. What happens right there, man? The 23.6 fib, the 9 EMA, and just about the VWAP, the 9 EMA and the 23.6 fib with the decrease in volume was enough for me, man. And you had VWAP there. They all met in this area right there. That is a buy signal. And that's why you got such a big run right there, you know? So again, just try and focus, like, you know what I mean, on yourself. Like, this is why it's important to just get your sleep. You know, coming in, staying focused. You have like your one or two stocks that you're watching, and you just have to remind yourself, like, all right, let me stay focused on the one stock that I really, really like, and I'll just keep an eye on the other ones and not try to bounce back and forth. Streaming stuff. You can probably tell, bro. It's not, yeah, you can tell I'm exhausted. You can tell I'm exhausted. I sleep during lunch and I don't ever sleep. And that's the other part. Thank you for reminding me. God, I fucking love you, dude. Bro, listen, man. I also wanted to add that in. Now, not only am I trying to find trade setups, I'm trying to, you know, eyeball them up in real time and take them. I'm trying to talk it out. I'm trying to do the trading, and I'm trying to do the stream. So yes, it's not that the stream has worn me out. Yes, it's wearing me out, but it's like, I'm good. Fuck that. I'll sleep when I die. But it's more about being able to be focused, and that may have played a part because I wanted to do what so well for other people. And I'm like, man, I just was hoping somebody could have taken advantage of it, because I would have felt a whole lot better. There was just this beautiful setup here that people could have had such a great opportunity to go into the weekend and, like, you know, have a free car wash and a steak, take their family out for a free steak dinner and stuff. I mean, depending on what you did, this was a high conviction trade. Like, those 10 contracts, take $500 and then times it by 200. That's a $1,500 day in 3-4 minutes, or 7 minutes. What is that? 369. You know, under 10 minutes, you made what people make in a week. But yeah, man, that's also it, because I'm concentrating on, like, am I going to trade the SPY today? Am I going to trade a stock today? You know, I'm worried about the live stream, trying to talk and do this and that. So yes, my focus needs to be right there on the charts, and I'll just have to work on it. Everything will get easier with time. But thank you for bringing that up, because I forgot to bring that up, man. You're right, it does. It really had it plays a little role. It definitely does, man. Because you're trying to do the stream, and then you're also trying to read, like, MACD, RSI, volume. You're trying to get your fib. You're trying to put yourself in the best position possible, and also get your entry down, you know, while also trying to help other people. So sweet, man. I hope it helps, bro. And you'll see sometimes these like, when you do some of this stuff, we're gonna get it, bro. We're gonna have a home run trade. It's coming, bro. We're going to give it a little time. It's going to come. We're going to let it come to us. Yeah, exactly. And actually, you know what? Yeah, for sure, bro. I will be. I'm going to be ready to rock tomorrow. I'm going to be ready for tomorrow. Even though it's a Friday and I don't think there'll be much volume, you might see a small cap or two. We should at least have a little volatility in the morning. Yeah, man. Shit, I forgot what I was going to say, dude. Fuck. Oh, I don't mean to cuss on here. But no, I just wanted to say thanks for bringing that up, because that was the other point. All right, there were other things distracting me from what I needed to be focused on, and it's like, you got to be zoned in. Like, look at this. You got the 9 EMA, the VWAP, and 23.6 fib right here. Like, this is this is a put your foot on the pedal type of trade right there. Boom. And then you're done. You wipe your hands. That is a trade which this doesn't happen all the time, but these 3 candles, that's it for the week. That could make your month, in all honesty. But this market has had some great opportunity, as long as you're able to find it. You know, there's opportunity all over. China ADRs, your AI stocks, the overall markets make moves. IWMs, small caps. Like, there's opportunity all over this market, you know? But that's it, man. I gotta use the bathroom, Cons. I appreciate you, bro. Like I said, I'll message you tomorrow, bro. I know I told you I was going to, but I'm gonna message you, man. I appreciate the input, man. I'm glad that you can see that too. Again, man, I appreciate you bringing that up, because you're right. And that was one thing that I wanted to mention was, you know, it's going to take me just a couple minutes, or, you know, just a little bit of time to get used to being able to to like go through this, call it out as I see it, try to like help out other people and do what I do, you know? So yeah, man, I'll holler, bro. You have a good weekend. I'll see you in the morning too, bro, because it's not Friday just yet. So you're right. We got one more day. There's still one more day. At least you live to fight another day. If you guys take anything with you, just take that. Don't blow yourself up. Live to fight another day. And we're going to leave it on that. If you guys have any questions, comments, post them in the chat. We're live Monday through Friday, 7:30 to 4, I believe, trading. Appreciate you guys being here. This was a good live stream. This was a good lesson I wanted to give to you guys. I think this could help a lot of people with not only the emotional part, with the being able to read and react. All right. Again, because you're not trying to predict the future. You're just putting yourself in the best position possible where you know if things go the opposite way, you have minimized the loss. And you let your winners speak for themselves, and they will put you on top. That's all it is. It's not about trying to predict the future here. There are signs that help you dictate what the future is going to bring. But this was a grade A setup. And what happens when you start to get emotional on a second, third round, and here you are trying to play along in a consolidation. You know what I mean? Luckily, I was able to get out. Because that thing could have just went down to VWAP and I'd have had a red day and be like, what the was I doing? No, it don't even matter if it was a smaller, size. I shouldn't even have been in it. The question is, why would I put a small size trade on? Is there something that's telling you that it's not worth it? You shouldn't be trading it? So that's it, guys. Thank you so much. We'll see you guys in the morning, 7:30. We'll be here live, and we'll be ready. We'll be focused. We cover this kind of stuff so we don't do it again. Or at least do it again the next day or the next, We might have to revisit it in a month or two, but that's okay. We're human, And that's why they tried to eliminate humans from doing this stuff because of shit like that. So, again, thank you guys. You guys have a great night. Get some sleep. Get the helmets on. Strap in your seatbelt. We got one more day. We live to fight another day, gang. So, thank you guys for joining us. I will see you guys in the morning, man. Thanks a lot, guys. Have a good night.